Welcome, everybody. This is our first webinar for the year in 2022, and I'm so excited. There's so much excitement, and everybody wants to be better this year. We have all kinds of resolutions, and I hope that your resolutions, you're going to make it come true. And I have started mine already. Some of you may know that I had a really bad back, and I threw my back 3 times in the last 2 years because of pandemic, because I've been doing these type of Zoom call all day long. So my back has been really weak. So I started my exercises and I've been doing it. So I definitely have started to see the difference, and I cannot wait to be, to feel normal again. But I'm here to hope that I can continue to provide information and education for you guys so that you guys can make a really good investment decision for your real estate purchase or sell. All right, let's get started. Today is January 12th, 2022. And of course, a lot of people ask, so how's the market right after the holiday? Now, this is what happened this past weekend. This past weekend is the first post-holiday weekend, and these are the open houses. And no, there's no COVID restrictions for showings. As you see that people were lining up outside the house, because inside the house, there's also a line. I think when we shared these pictures on social media, everybody was just kind of like shocked. And this shows that how many buyers have been waiting and getting ready to go buy properties. Unfortunately, December, as a lot of us know, that most buyers are probably really busy traveling and also visiting family. So the market was pretty slow. But as soon as the holiday is over, people all came back out to buy. Now, you probably wonder, why is there so many people? I thought, it's getting too expensive. People feel like, we should just wait until the market crash or the price come down. Why are there so many people, right? So this is what I'm going to do in the next about 20 minutes or so to go over the reasons why, there's so many buyers are ready to buy right now. So first of all, I know you noticed already in December, there were very, very little inventory. And so many of our buyers always said, like, we don't see anything, just that handful of properties only. But you know what? From what we can find right now, there are about 105 single family listings that are not on the market yet, meaning that you don't find them on Zillow or Redfin right now. They're not on the market yet. So there's some hope. Out of that 105, 79 of them just listed starting January 1st. So in the past 12 days, there were 79 off-market or coming soon listings that just came on that we know of. And also for condos and townhomes, there are 52 total listings that are coming soon off-market. And since January 1st, there were 23. So 52 is total. They may have came on, since last year, December, but since January 1st, there were 23. So we have mentioned that a lot of times sellers, they're just not ready to sell right in December because they want to entertain their family before they move. They are just, they believe that in December is too slow, so they don't want to get ready yet. But as soon as the holiday's over, that's when they start getting ready to sell, which is going to take about 2 weeks to a month for them to get the house ready if it doesn't require major work, and then put it on the market. So in the next few weeks, you're definitely going to start seeing more and more properties. So let's take a look at Santa Clara County, what had happened in the last year. And let's look back. And if you see the blue columns here, we get the most listings in around April. And this is pretty much consistent for every year besides 2020, but it's very consistent that usually the number of listings peaked in April, and also the number of buyers peaked in April as well. And then of course, towards the end of the year, especially December, typically it just drops quite dramatically. And then, however, the median sales price, as you see that, especially last year, it has been going up pretty steadily. And then the price had been really strong back in June. These sales prices were recorded in June, but remember, it takes 30 days to close. So that means they made an offer in May. When sellers ask us when is the best time, or when is the market going to start slowing down, actually it starts slowing down around June. If you put your property on the market in June, then you're starting hitting the graduation month where there are a lot of year-end activities. So if you do plan on selling, definitely you want to look at somewhere in the before, hit the market by May, no later than May, and that will be your best time to sell. In terms of the sales price to list price ratio, last year, January is 4% over asking price, but then since January, it has been going up 10% over asking, and this is pretty much the average. And December, there was so little inventory, but then there are still so many buyers for those inventory. We actually see the highest sold over list price percentage in Santa Clara County. Now let's look at condos and townhomes. For condos and townhomes, this is where we see the pricing actually more stable. Same thing, the inventory dropped quite dramatically towards the end of the year. And then we see that their sold price over list price is a lot more moderate compared to single family. They're ranging about 4% or so. And in terms of 2 to 4 units, I thought to share because we started to have more and more clients asking about 2 to 4 units like duplex, triplex, quadruplex. And if you look at the number of listings, they are pretty consistent. And but then still towards the end of the year, it's definitely still dropped quite a bit. But then the pricing is more stable, and they just kind of like following that that trend of the season, and then kind of go back up and come back down, and go back up, come back down. And then in terms of the competition level, it ranges around 2%, 1 to 2% or so. Now, what about Alameda County? Alameda County is following the similar trend as Santa Clara County, and they have the number of listings in December went down to closer to 500 listings in that month, and the price has gone up to almost close to $1.2 million in terms of their median sales price. And for their sales price to list price, Alameda County, as you can see, is stronger than Santa Clara County. So much demand. People were just moving to Alameda County from San Mateo County and Santa Clara County. And as you see that these are all over 10%. 10% over asking price. So as much as in June is 16.5% over asking price. And in December is this 13.2% over asking price. So Alameda County definitely have seen a huge price increase compared to last year. And what about condos and townhomes? I'm going to show you this really weird chart over here. I know you already noticed that, but let's come back to this side first. The sales price over here, they had gone up quite a bit as well. And the number of listings also had dropped a lot. But then over here for condo and townhomes, there's this one property. They somehow the listing agent recorded the sale instead of selling at I believe it's like 435,000. She had recorded at $435 million, and that's why our data is completely skewed. But if you just look at all these numbers down here, they are about 4% to 5% over asking price. So again, you see that the demand for condos compared to single family has quite a bit of difference. And 2 to 4 units, we have similar statistics here, and especially for the demand for 2 to 4 units is still really strong. They're all over the asking price since last year. Now, what about San Mateo County? I thought this would be interesting to look at first is last year, December 2021. And as you see that the median sales price is $1.8 million. It actually dropped from November, but of course, we're not too surprised. Sometimes like December depends on the number of units. The sales price, we do see that it might drop a little bit compared to November, and same thing for condos. And the number of days actually lasts a little bit longer, 23 days versus 17 days in November. And for condos, 29 days versus 22 days in November. And there were a total of 385 sales, almost 20% less than last month. And for condos, they actually have 12% more than last month. But I want to compare what's going on compared to 2020, a year ago. Now, if we look at single family, a year ago, it was $1.7 million. Median sales price has gone up to $1.8 million. And the days on the market had come down 7 days from 30 days to 23 days. But then the number of listings is only 15 listings less than last year. So it's not too bad. It's very consistent. But you see that the price has gone up 5.8% from last year, and while it stays on the market 7 days shorter. As for a condo and townhome, the property value has gone from $820,000 to $880,000. And this is more significant is that last year, 2020 December, it took 40 days to sell a condo and townhome, but last month it only took 29 days. And then there are about 157, slightly more than last year in terms of number of sales. And that is a 7.3% price increase from last year for condo and townhomes in San Mateo County. So when everybody always talk about that's because our inventory is so low and that's why our price has gone up. You're correct, absolutely correct. December listings always low, but as I had mentioned earlier, December listings is very low compared to the rest of the year. And it's actually the same trend for almost every single year. Now, if we look at compare just the December listings for Santa Clara, Alameda, and San Mateo counties, all three counties combined in 2017 is 117 listings. 2018, there were 59 listings that came on the market, by the way. These are properties that came on the market. And then 2019, there were 76 properties that came on the market. In 2020, we had 192 properties came on the market, which is really significantly more than any other years in the past 5 years. And then 2021, we came back to the same level as 2017. So in terms of how much more, we're actually more than 2018 and 2019, but we're the same level as 2017. But yes, you're right. It is. We do have a lot less compared to year 2020. But I want to show you all year long what happens throughout the years though. 2017, we had 50,000, probably 50,000 listings, new listings. 2018, 53, almost 54. 2019, almost 52. 2020, we have 54. And 2021, we have over 58,764. We actually have more listings, new listings, compared to the past 4 years. I think this is one thing I wanted to clarify because I keep hearing people saying that 2021, we had such a low inventory. However, we actually had more listings compared to all the past years, at least the past 5 years. And it's just that we have so much demand on the market, and that's why the pricing are still going up. It's just not satisfying all the demands out there. So what happened because of that? Now we see it on the battleground. And as you see this one, I highlight this one particular offer, that all these offers and offer deadline, we track them and then see how many disclosures, how many offers they have received. There's this one, the offer deadline was yesterday, and we had taken a look at it. The asking price $999, and it was a kind of, we call it a fishing price, right? It's like we knew that the market value in that area is not going to be $999 or $1 million, but it did draw in so many people to the open houses, and they had sent out 208 disclosure packages. They had received, the last time we heard yesterday morning, they had received 21 offers. They could have received even more afterwards, but what we know is that their final accepted offer price or sales price was over $1.6 million, and that's over 60% over asking price. And it's just, it blows my mind because, in a way, when you know that that market has a lot of buyers coming into, that interest in that area. And by the way, this property is not considered fully updated. It's like single pane windows. So there's some work that needs to be updated still. It doesn't have a master suite, and still sold over 60%. And our valuation for this property is actually at about $1.5 million, but it went way over the market value of this property. And another one is that 1,300 square feet in Cambrian neighborhood, which is 95124. It was sold off market. It didn't even make it to the market, which is one of those that, as I have shown you earlier, we have a list of what might be coming on the market soon. And that one was sold 24% over asking price for $1.8 million before it even hit the market. And over again, you see on this chart, it's just that people are making offers before it even hit the market. So be sure that if you are looking for a property, talk to your agent and make sure that they are sending you all these properties that are not even on the market yet. Want to make sure and remind everybody to subscribe to our YouTube channel. All of these housing market webinars, and also, some of our speakers have shared really good information there on our YouTube channels. We have over 200 videos right now, so please do subscribe. And also, if you find it a little bit too overwhelming, go to our website, halengroup.com/HG-TV. We have different playlists, so you can kind of like just look through town hall webinars, look through housing market updates, or we even have workshops for commercial real estate. So you can go through all of them, and hopefully that can help you as well. All right. And mortgage loan, what's going on with our mortgage loan? I actually have a trivia for everybody. I want to see how well do you guys know about mortgage rate history. If you know the answer or you want to make a guess, please do type it into the chat box and let me know what your answer is. The first question is, what was the approximate mortgage rate in 1982? Who can give me an answer? I hope you guys can start typing into the chat box. Is it 5 to 8%, 8.01 to 10%, 10.01 to 13%, or 13.01 to 20%? Oh, I bet all these people who answered D are they've been around for a while. They know the market well. The answer is D indeed. And let me see if I can, there you go. It's 16.04. Not Richard, I'm not calling you old. I was just saying that you guys been around, very experienced. And I know the answer too, so. and 16.04, and I think this is a question that we asked last month at a community event, And there were a lot of people around. We asked this question and they guessed about 7 to 8%. I was like, no, you're way off. It's 16.04%. All right, next question. Now, from 1972 to 2009, so last recession, what was the lowest average annual mortgage rate recorded? Is it less than 2%, less than 3%, less than 4%, less than 5%, or less than 6%? Less than 5, E. We have less than 6, less than 4, less than 6. Everybody, you have, come on, I know more people want to guess, like to see more answers. Anyone else? All right, ready? E. Okay, there you go. In 2009, that's the lowest. It's less than, well, it's close to 5, but still more like E, less than 6%. It's 5.04. That was the lowest ever recorded before 2009. I think a lot of people were pretty shocked about this because they thought that, we had 4% interest rate before, but no, we didn't really get the 4% interest rate until much later. And our last question is, which year recorded the lowest mortgage rate between 2010 to 2021? That's the question. Yeah, you can just, I gave you the answer. Yes, 2020 is 2021, 2.96. That is the lowest that we had in 2021. 2020, you're correct. Actually, end of 2020, it went down to 2.6 something, but 2021 is the lowest in terms of annual average because it lasted quite a few months for that. And so there's a reason why I'm asking you guys these questions, get you guys to think. Now you look at the monthly averages since December 2020, as you see, it was 2.68, and then January 2021, it was 2.74, and it's been ranging right around the, high twos, around 3%, and then finally December it went to 3.1%. And these are conforming loan amount, by the way, so it's not jumbo loan amount. And now conforming loan amount as of today is at 3.5%. And for jumbo loan, it's actually lower at 3.125%. So with that said, I hope that everybody pay attention that the interest rate is going to go up, but then how much is it going to go up? So let's take a look at the inflation rates first. Inflation rate we had talked about last time was like December had a record of 6.8% in terms of the inflation rate. And you know what? Sorry, that was November. And December now is at 7%. And they're expecting it's probably going to be a little bit over 7.1% this month in January. So it is high. Historically, it is a very high inflation rate. And US News, it says that this inflation is at 40-year high, and it pressures consumers, Fed, and Biden. So Powell told Congress that if it becomes necessary to fight high inflation more aggressively, the Federal Reserve is prepared to accelerate the interest rate hikes it plans to begin this year. And the Fed's benchmark short-term rate, now pegged near zero, is expected to be bumped up at least 3 times this year. So what happens if the inflation rate goes up? If you take a look at, let's take a look at the US 10-year Treasury yield first on this graph. As you know, 30 years mortgage rate, actually, it correlates with the 10 years Treasury yield. So this is the black line. And then we look at the 15 years, the blue line, and 30 years mortgage rate is the green line. And they are pretty much the same trend. And if you look at the prime rate, which is very closely tied to the Fed rate, this is they're obviously, it doesn't fluctuate as much, and that's why you see a smoother line here. But the 10-year Treasury, 30-year mortgage rate, they follow the same trend as the prime rate. So what would happen if inflation rate is high? They're pushing the Fed rate to increase rate, which in turn will also push up the mortgage rates in the future. So that's why we look at the projections from different agencies. And unfortunately, these agencies, they have not updated their projections yet. The last time they had it was in October, for Freddie Mac was in October, Fannie Mae was in November, Mortgage Bankers Association was in December, and National Association of Realtors was in November. And these numbers are the same as what I had presented to you last month during our town hall. And we had averaged about 3.7% until like 3Q 2022. But I can be very confident to tell you that probably in the next couple of months, we're going to see a lot of adjustments from their projections here. And we're probably going to see this number to be higher than what is showing here. So what will happen then if we see the interest rate is going to go up? Let's assume that you're purchasing something at $1.5 million with 20% down. So your loan amount is 1.2. At 3.125%, you're principal and interest is $5,140 for 30 years mortgage. Now, if we increase the interest rate by 0.875% to 4%, it could happen end of the year or beginning of next year, then your payment is going to go up to $5,729, which is more than almost $600 more compared to what you could get this year. And $600 per month is a lot, and that's $7,200 a year. And what happens if you're saying, I want to maintain my monthly payment to be very similar to what this payment is, because at the end of the day, what are people buying? They're buying the monthly payments. They want to be able to lock in their monthly payments for the rest or for the next 30 years. So that's why a lot of people are looking at the monthly payments. But if the interest rate is at 4%, that means their loan amount is going to come down to $1.075 million. With the same amount of down payment, it only comes up to 1.375 for your purchasing power. And another word is that just a 0.875 increase in interest rate increased your monthly payment by 11.4%. And also you lose 8.3% on your purchasing power. And this is one of the main reasons why you see so many people are lining up out the door at the open houses, because they want to lock in this interest rate right now. Otherwise, they don't, we saw that historically, we don't really see interest rate this low, and we can only predict that the interest rate is going to go up from now on. So I know it's frustrating, but just be patient and then, do your own due diligence and make sure that you work with your realtor to make a smart and informed decision on your offer. All right, so other than that, all that mortgage rates and pricing and the inventory, I also want to show you about the economy for this, for our area. There's Meta, which is Facebook, Apple, they all leasing huge property deals these days. There are big developers coming in Fremont, and even Southern California real estate company, they buying Palo Alto buildings, and East Bay, there are all these different places that are being leased out or being bought. So there's still a lot of large companies coming into our area trying to build a business and also do a lot of different kind of developments. So we do see that the economy-wise is doing pretty well. And on top of that, the unemployment rate in the Bay Area, San Francisco area, has been lower than the national average, has been coming down as well. So we do see that employment is doing better, and the unemployment rate is also doing much better than the national average. So in conclusion, before we go into the tax saving strategies, this is what I find is that the supply level will definitely increase modestly as we see these coming soon, and off-market listings has come out since January 1st. But then I do believe that the demand is going to be really strong, because a lot of people are trying to lock in the mortgage rates. And knowing that, I do think that mortgage rates are probably going to increase by about 1% within the next 12 months. And unemployment rate in the area is going to remain lower than national average, with improvements in sight. So I feel that this area is going to be pretty strong. And it's not just because I am a realtor, and it's truly from what I'm trying to present to you, all these different research and statistics to show you why I do believe that the housing market is going to be strong in the Bay Area.
Thank you so much for watching our YouTube channel. And don't forget to subscribe to our channel, like our videos, make some comments, because we're going to keep you posted on the most updated real estate news, housing market data, and also real estate tips and advice from all over the real estate industry. So thank you so much for watching, and I'll see you next time.